Well, tomorrow is opening day for the new Costco Business Center at Takatu Commons on Muldoon Road. This is going to be the 27th Costco Business Center in the United States.
So Costco opened its first store in Shanghai yesterday. The crowds got so insane.
Today, the price of a Costco membership increases for the first time in 7 years.
Have you ever walked into Costco for just one item, only to leave with a cart full of things you didn't know you needed? You're not alone. Costco has perfected the art of turning casual shoppers into loyal devotees.
Never, ever spent less than 3 digits here. Even if I just come in for one thing, I always end up buying a minimum of $100 worth of stuff.
Generating an operating income of $7.367 billion on revenue of $249.6 billion, with a market capitalization of $393.90 billion as of October 2024. While Walmart reports a higher net income, $15.55 billion versus $7.367 billion. Costco's inventory turnover ratio of 12.60 far outpaces Walmart's 8.79. This is more than just an operational statistic. It's a signal of how efficiently Costco moves products, keeping shelves stocked with fresh goods while minimizing carrying costs. But Costco's strategy goes beyond just selling in bulk or offering free samples. The average Costco shopper spends 37.3 minutes per visit, longer than Walmart's 31.8 minutes. A small difference but crucial when you're running on razor-thin margins. It all begs the question, how has Costco, a company sticking to an almost entirely physical retail model, managed to outperform its competition in an e-commerce-driven world? At the core of Costco's success is its unique membership model. Unlike Walmart or Target, where anyone can shop, Costco requires you to pay for the privilege of entry. As of September 2024, a standard Costco membership costs $65 per year, up from $60, while the executive membership costs $130, up from $120, offering additional perks like 2% cashback on purchases. This exclusivity is counterintuitive in today's retail environment, where convenience and accessibility often drive consumer behavior. Yet, it works, and remarkably well. The membership model taps into the psychology of commitment. Once consumers pay the membership fee, they feel an obligation to maximize its value. This psychological phenomenon, known as the sunk cost fallacy, makes members more likely to shop at Costco regularly to justify the upfront expense.
Spend about $25, and I ended up spending over $700. Which is why my husband never lets me come here.
This strategy has paid off, with membership renewal rates in North America reaching 92.9% and global rates at 90.5%, signaling strong customer loyalty. In 2024, membership fees contributed $4.85 billion, providing a steady revenue stream that helps Costco maintain competitive pricing, even in uncertain economic times. This recurring income gives Costco an advantage over competitors like Walmart and Target, who lack similar membership models and are more exposed to market fluctuations. Costco's growing membership base and steady revenue make it better equipped to handle economic downturns and stay competitive in the retail landscape. Costco's ability to foster loyalty through its membership model can be contrasted with Amazon Prime, which charges $139 per year for a range of benefits, including free 2-day shipping, access to streaming services, and exclusive deals. However, while Amazon's membership encourages frequent online shopping, Costco's model promotes physical store visits, reinforcing the unique treasure hunt experience that shoppers find so compelling. One of the most unique aspects of Costco's business model is its intentional limitation of product choices. Whereas Walmart offers more than 120,000 SKUs, stock-keeping units, Costco only stocks about 4,000. This curated selection reduces decision fatigue, a psychological phenomenon where too many choices can overwhelm consumers, leading to indecision or dissatisfaction. By limiting the options available, Costco makes it easier for shoppers to make quick decisions and feel more satisfied with their purchases. Limiting selection also creates a sense of scarcity. The treasure hunt experience that Costco shoppers rave about comes from this feeling of limited availability. Shoppers are often faced with one-time deals on high-ticket items, such as electronics or premium home goods, encouraging them to act fast. There's always a lingering fear that if you don't buy that 75-inch TV today, it might not be there on your next visit. This stands in stark contrast to the retail strategy of Target or Walmart, where the focus is on offering a wide variety of products across numerous categories. While more choices might seem like a benefit, the vast selection can sometimes overwhelm customers and lead to reduced satisfaction. Costco's operational model is built on efficiency, a hallmark of its success. With a gross margin of just 12.61%, Costco operates on a low-margin, high-volume strategy. This is significantly lower than Walmart's gross margin of 24.38% and Target's 27.63%. Despite these thin margins, Costco remains highly profitable thanks to its focus on high sales volume and streamlined operations. Costco's ability to generate profits with such a low margin can be attributed to several key factors. First, its limited selection of products allows it to negotiate better deals with suppliers and focus on high-quality items that can be sold in large quantities. This reduced complexity in procurement, warehousing, and distribution enables Costco to turn over inventory rapidly, keeping products fresh and minimizing holding costs. In 2024, Costco's inventory turnover ratio was 12.60, compared to Walmart's 8.79 and Target's 6.12. A higher inventory turnover ratio means that Costco moves products off the shelves quickly, reducing the costs associated with storing unsold goods. This efficiency was particularly beneficial during the COVID-19 pandemic when supply chain disruptions plagued many retailers. Competitors like Walmart and Target faced challenges with overstocking certain items while experiencing shortages in others. Costco's lean inventory model allowed it to remain nimble and adjust quickly to changing market conditions. Another crucial factor in Costco's operational efficiency is its warehouse-style store design. Costco stores are not designed to be visually appealing in the traditional sense. They are functional, with goods displayed on simple, industrial-style shelving, often directly on pallets. This no-frills approach minimizes overhead costs and reduces the need for elaborate merchandising. In contrast, Target stores are known for their well-curated layouts and attractive displays, which, while aesthetically pleasing, contribute to higher operating expenses. By keeping its stores simple and cutting unnecessary costs, Costco can pass on savings to its customers. This approach aligns with its brand image as a place where consumers can get high-quality products at lower prices, reinforcing its value-driven business model. One of Costco's secret weapons is its private label, Kirkland Signature. Launched in 1995, Kirkland has grown into a trusted brand with a reputation for offering high-quality products at competitive prices. Costco's Kirkland Signature brand brought in $58 billion in sales during Costco's fiscal year ending August 2021, equaling about 25% of the business's total revenue, CNN reported, making Kirkland America's biggest consumer packaged goods brand in terms of sales. Kirkland Signature covers a wide range of categories, from household essentials like laundry detergent and toilet paper to premium items like organic olive oil and wine. The brand's ability to compete with well-known national brands while maintaining lower prices has made it a favorite among Costco shoppers. In many cases, Kirkland products are viewed as equal to or better than their name brand counterparts. A famous example is Kirkland Vodka, which is frequently compared to and sometimes rumored to be the same as the premium Grey Goose vodka, but a fraction of the price. By controlling its private label production, Costco can ensure consistent quality while keeping costs low.
I think to most stories, there's always a lot more behind the curtain than you expect. Generally speaking, when people ask, I tell them, all we're trying to do is sell stuff cheaper than anybody else. But there's a lot more work that goes into it.
This contrasts with Walmart's, Great Value, and Target's Up and Up brands, which are generally perceived as budget options rather than premium alternatives. Kirkland's positioning as a premium brand without the premium price has created a level of customer loyalty that other retailers have struggled to match. Kirkland's success also allows Costco to differentiate itself in an increasingly competitive retail environment. As inflationary pressures continue to push prices higher, consumers are turning to private labels in search of better value. Kirkland Signature's reputation for quality means that Costco is well positioned to capture these cost-conscious shoppers. While Costco has thrived over the years, it is not immune to broader market forces. Inflation, rising labor costs, and sustainability concerns are three major challenges that the company must address to maintain its competitive edge. In recent years, inflation has been a persistent issue for retailers, and Costco is no exception. Rising costs for raw materials, transportation, and labor have put pressure on the company to raise prices. While Costco has worked to absorb some of these costs to maintain its value proposition, it has had to increase prices on select items to protect its margins. Despite these challenges, Costco has fared better than many competitors. Its bulk-buy model and lean operational structure have allowed it to minimize the impact of inflation on consumers. However, as inflation continues to erode purchasing power, Costco's ability to maintain its low-price image will be tested. Costco's labor practices have long been a point of pride for the company. In 2024, Costco raised its starting wage to $19.50 per hour, compared to Walmart's $16 and Target's $15. This commitment to paying higher wages has contributed to lower employee turnover and higher productivity, but it also increases operating costs. CEO Ron Vacris announced that the average wage at Costco has now reached just over $30 per hour after the most recent round of raises. This places Costco roughly $5.50 above the retail industry average of $24.57 per hour as reported by the Bureau of Labor Statistics. For comparison, the median Costco employee made $50,202 in wages and benefits last year, significantly higher than Walmart employees who earned $27,136 and Target employees who earned $25,993. The company credits its wage policies and its practice of promoting from within as key factors for high employee morale and low turnover.
In a market like this, all of our employees come from transfer, create more opportunities. So we have a lot of long-term employees in here. So it's relatively a smooth operation as long as we can get the goods, we get the construction done. It's an easy operation.
In fiscal 2024, 85% of the 95 new warehouse managers were promoted from hourly positions. While higher wages benefit employees and contribute to Costco's positive public image, they pose a challenge as labor costs rise across the retail industry. Competitors like Amazon are also increasing wages to attract and retain talent, which could pressure Costco to continue raising wages in the future.
I've been at this site since we launched in 2018, and this is by far the biggest increase that we've ever seen.
It is changing our lives, and I believe I speak about everyone here in the company. We saw people screaming, we saw tears today.
Sustainability is another area where Costco has faced scrutiny. The company's bulk buy model, while efficient from a cost perspective, generates significant waste, particularly in terms of packaging. As consumer demand for eco-friendly products grows, Costco will need to address these concerns to stay competitive. Competitors like Target and Walmart have made aggressive moves to reduce plastic waste and invest in sustainable practices. For example, Target has committed to making 100% of its packaging recyclable, compostable, or reusable by 2025. While Costco has made some efforts towards sustainability, it has been slower to act compared to its competitors. For instance, Costco's Sustainability Commitment Report highlights initiatives such as sourcing seafood responsibly and reducing greenhouse gas emissions, but the company still faces criticism for excessive packaging and its bulk sales model, which can lead to higher waste generation. As consumers increasingly prioritize sustainability, Costco will need to adapt its operations to meet these demands. One potential area for growth could be the introduction of more sustainable product lines or reducing plastic and packaging for Kirkland's signature products. Failure to address these issues could alienate eco-conscious shoppers, particularly younger consumers who are driving the sustainability movement. In the digital age, one of the most significant challenges facing traditional retailers is the rise of e-commerce. While giants like Amazon and Walmart have heavily invested in online infrastructure, Costco has remained largely focused on its physical retail stores. As of 2023, Costco's e-commerce market share is 1.5% compared to Walmart's 6.4% and Amazon's dominant 37.6% share of the U.S. e-commerce market. Costco's relatively low e-commerce presence is surprising given the growing trend toward online shopping. The company has made efforts to expand its online offerings, including same-day grocery delivery in partnership with Instacart and its Costco Next program, which offers exclusive online deals on premium brands. However, these initiatives have yet to make a significant dent in overall sales. The question remains, can Costco continue to rely on its physical stores, or does it need to make a bigger push into e-commerce to remain competitive in the long term? There's no doubt that the in-store experience, with its treasure hunt appeal and exclusive deals, is a significant driver of Costco's success. However, as more consumers shift to online shopping for convenience, Costco's reluctance to fully embrace e-commerce could become a liability. A key competitor, Walmart, has already successfully balanced physical retail with a robust online presence. Through services like Walmart Plus, which offers free shipping and other benefits, and its massive investment in online infrastructure, Walmart has positioned itself as a serious challenger to Amazon in the e-commerce space. Costco's challenge will be to figure out how to offer a similarly seamless online experience while maintaining the unique aspects of its business that drive in-store traffic. One area where Costco has outperformed many of its competitors is in international markets. While Walmart and Target have faced challenges in expanding their global footprint, Walmart notably struggled in markets like Germany and South Korea. Costco has seen remarkable success abroad. As of 2023, international sales account for approximately 27% of Costco's total revenue, with the company making significant inroads in countries like Canada, Japan, and China. Costco's entry into China is particularly noteworthy. The company opened its first store in Shanghai in 2019, and it was met with overwhelming demand, so much so that the store had to close early on opening day due to overcrowding. Since then, Costco has expanded its presence in China with plans to open additional locations in the coming years. The membership model, combined with the allure of exclusive deals and premium Kirkland products, has resonated strongly with Chinese consumers who are becoming increasingly discerning in their purchasing decisions.
This supermarket is so big and many say the prices are very cheap, so I got a membership card.
By focusing on key international markets where its bulk buying model and membership structure can thrive, Costco has been able to grow its global presence without the same level of trial and error that has plagued other retailers. However, the company will need to continue adapting its strategies to suit local markets and consumer preferences if it is to sustain its international success. Costco's ability to thrive in an increasingly competitive and digital world speaks to the strength of its unique business model. The combination of a loyal membership base, operational efficiency, and the trust built through its Kirkland signature brand has allowed Costco to outperform its competitors in many key areas. However, as market dynamics shift, Costco will face new challenges. Inflation, rising labor costs, and sustainability concerns will test the company's ability to maintain its low-cost, high-value promise. Additionally, the growing importance of e-commerce will require Costco to rethink its online strategy to ensure it can compete in a digital-first world. Despite these challenges, Costco's strategic advantages, its membership model, operational efficiency, private label success, and international expansion position it well for the future. The treasure hunt may evolve, but as long as Costco continues to adapt and innovate, it seems likely that the company will remain a dominant force in the retail industry for years to come. Costco may have hacked the American shopping psyche, but the question remains, can it hack the future?